Good morning, good evening, good afternoon, wherever you are in the world. Thank you all for coming. It's Saturday morning where I try and punch through all the news of the day, and I always try to get this done in 10 minutes. It's going to be hard because there's so much to cover. So let's just jump in, make sure everything's working, because you never know. You never know at all. So let me see if the sound is on. I can't test. Yes, we are live. Good. Let's jump into the story today. So, again, as I mentioned, a lot of stuff to cover. And the story today, is this even showing up? Boom. Yes, it is. Good. Before we actually jump into the stuff I'm going to talk about, there's so much happened this week that I didn't get a chance to touch on because of being cancelled and survivors and a whole bunch more stuff. But some of the key things for me for the week were the fact that Jerome Powell said inflation is too high. Wow, what a thing to say. And then we had the inverted yield curve, the 2 and the 5 year and everything else. We'll talk a bit about that in a minute. Oil is back under $100. Yes, I wish I had margin to short it at 110. That was my plan. I didn't, but that's okay. The Japanese yen fell 9% in a day, which is pretty staggering. Supply chain problems are back. China's shut down because of C-19. There are like 174 cargo ships apparently parked off of Hong Kong and Shenzhen. Real problem. Commercial real estate continues to have issues as well in places like big cities like New York. And some 4.35 million American workers have quit their jobs in February. February alone. Think about that. So either somebody's making a lot of money on crypto or people are just fed up with their jobs. And there's about 12 million job openings right now. And that is crazy. Also, U.S. home sales. We'll talk a bit about real estate in a minute too. Toyota had to cut production by 17% due to supply chain problems. And Tesla beat production. Unbelievable. Company's unbelievable. And Russia, I feel bad for the people on the ground in Russia, but apparently the economy is back 15 years in time, and they don't have any access to any staples right now. So a lot of bad stuff. But let's just jump in, talk about the big news so far today. And I mean, still, yes, we are. It's always comforting when I find out we're still working. First of all, we just went over 19 million Bitcoin. The miners that mine these Bitcoin are hodling them. So there's only 2 million left until for the next 120 years to mine. So there's not a lot of gravy train, and we are less than 2 years away from the next halving, which will drive prices parabolic. But we'll talk about another couple of things that we see driving prices up from where we are now. Now, the plan B, I remember people were very angry with plan B because they were expecting his model to work, his stock to flow model. But he did come out and he does maintain that the stock to flow model could still be in play. And he made an observation about the chart. Here it says, this article, Bitcoin's trading at a 55% discount based on this, and he believes there could be an immense upsurge in April. So whether you like him or not, I do believe in stock to flow up to a certain level. Once it hits the equivalent of real estate, it could still hang in there. And I do believe Bitcoin is very undervalued. And that's why you've got crazy buying happening right now from people like Do Kwon and Michael Saylor. And it is the hardest asset. When you look at the backdrop of what we've had over this 2022 so far, it is crazy. Anyway, he does believe we've seen similar situations where we've had big deviations like 55% plus back in 2011, 2013. And he believes that we are at this huge discount. So it's 23 months to the next halving, ladies and gentlemen, and all kind of moves are happening. But he's bullish for April, and I was bullish for April back in February. And 4 weeks ago, I said we could hit 50,000 in April, and it looks like we are on target to do that. Now, another guy, this is kind of interesting, Mike Novogratz, cool guy. He went from calling for a $30,000 Bitcoin to becoming a Moonboy in a very big about-face change of sentiment. He was saying it wouldn't be surprised if we went back to 30,000, and that was less than a month ago. And now he is seeing crazy Bitcoin adoption in the cycle. He has a close finger on the pulse of the markets. I thought he was trying to suppress price so he can get his boys in to buy some Bitcoin. Who knows? But he does believe very much in the Web3, in the Metaverse space, and he's believes he has a lot more positive sentiment than he did a month ago or at the beginning of the year. So that's very good. And we will talk about the metaverse as well during this show. Now, this was the big news. I touched on this. I was invited onto by Ryan from Crypto Banter. Big thank you to him for being on the show. I must say, when I got cancelled, he was one of the 4 people that reached out and said, hey, is there anything I could do? And he was a real gentleman and a scholar. And Michael Saylor was on his channel the previous Friday. So, thank you, Ran, for having me on. Now, I did touch on this. This is the CoinShares report from last week. There's 2 big black holes. This is the institutional money flow. You can see 51% of all the money went into Bitcoin, 45% into Solana. And the percentages, the other 5% are being fought over by Polkadot, Cardano, Ethereum. And you can see clearly what this means. And this is the stuff I've been talking about for a long time. Always follow the big institutional money because that dictates price. So let's look at what happened to the price of Bitcoin, for example. You can see here we have over 2,200 whale addresses with between 1,000 and 10,000 of Bitcoin. Now, this is a bit of an eye chart. It's hard to see. So I added a couple of arrows to help train your eye on where to look. So, for example, before the invasion of Ukraine, the red arrow, you can see the amounts that these whales have held. It was about 2,000 addresses with between 1,000 and 10,000 Bitcoin. And now it is over 2,200. And this is the highest level in over a year. So these whales are accumulating, no ifs, ands, or buts, and they jumped in hard between pre-war and green is post-war. And you can see a complete upspike. Now, a big part of this is not Do Kwon because he has more than 10,000 Bitcoin. So it's not him. There's other people as well jumping into the game. Now, let's look at the other name is Solana. This is a crazy chart. When you see it's up 80% in 18 days. We are about to touch on the 200-day moving average as the blue line. We do expect, after such a huge run, a little bit of what I call a breather, which is normal. And the 200-day moving average also, coincidentally, is at the fib 0.5 level, which is about $150. So getting above $150 may take a little bit of effort, but the strength has been mind-blowing over the last 18 days. So it's very surprising. Now, I'm not the only one to spot that, but so is Delphi Digital. And here you can see they put together a chart that focused on 2 things. Now, I'll walk you through this because a lot of interesting takeaways here that we can use for other tokens too. So it's like a little bit of a mini TA Tuesday on a Saturday morning, but there's just too much goodness to share. So the RSI divergence on Solana is a very interesting observation, what they painted here. You can see the red boxes at the bottom on the RSI, and when RSI goes above 70, it's a very bullish sign because historically Solana has gone bonkers when that happens. Now, the other thing you'll see there, they refer to an SR, and that is basically the SR flip is when previous resistance flips into support, and support flipping into resistance, etc. So the big takeaway here is you will see each time in the red boxes on the left, 1, 2, 3, and the 4th one today, each time the RSI jumps above 70, it is typically an overbought area after a strong price uptrend. But when you look back in time, when this happened back in, I think it was August 2021, when RSI broke above 70, Solana rallied 400%. And similarly, when in May and June 2021, it had a 268% upside. Not saying that'll happen now, but these fractals appeared similar on how Solana has been performing lately. So super interesting to watch and monitor. I do believe, though, after such a huge move, don't expect too much action. It's just crazy, like nearly doubling in 18 days. Now, speaking of Cardano and Solana, the CME group is considering altcoin futures on Solana and Cardano. This is great news. The Chicago-based exchange, which is the biggest of its kind, is looking at creating these futures because the clients are requesting it. Their director of equity and research products said this at a panel in London, I think on Wednesday. So watch for that. It'll be very handy to have more options derivatives to manage our risk. Now, speaking of Ethereum, the other one, this is an interesting chart. This is the average transaction fees on Ethereum, the 7-day moving average. And although Ethereum has not been attracting institutional money so far this year, nothing like the rate of Bitcoin and Solana, they are still improving in one regard, and that is transaction costs on Ethereum have almost hit the record 1-year lows. Not quite, but it may provide fertile soil for their burgeoning NFT market because the competition is intensifying from players like Solana. Now, as low transaction fees in Ethereum have tended to negatively correlate with NFT trading activities in the past. Obviously, if you're trying to sell a picture or an NFT for $100 and your fees are $100, it gets really, really painful and it stops things and it makes people find other alternatives. Now, this is kind of an interesting piece. Citibank, who are kind of new to analyzing, like all the big traditional banks are trying to get in on the stuff that they missed out on over the past decade. But here, Citibank predicts, I'll read this, the metaverse could balloon into $13 trillion market by 2030. That was interesting. So I was like, I wonder what Bitcoin would be worth if the metaverse goes to $13. Does anybody know? We'll see. But they do believe a couple of things that were real interesting in this article. They believe different forms of cryptocurrency will dominate the metaverse. Remember, the underpinning, there needs to be a currency underneath the metaverse to run it, just like there's a currency in the real world today. Now, but Citibank also noted that they believe crypto can coexist with fiat currencies, stablecoins, and even CBDCs. Yay, we love CBDCs. No, we don't. So let's talk about why I had to play with some numbers, of course, because I asked myself, okay, if the metaverse goes to 13 trillion, what could Bitcoin be worth? Ba-ba. No video of mine is incomplete without a model or some numbers. So here we are. If you look at the global metaverse market size in 2021, that's estimated by Statista to be around 38.85 billion. So I plugged that in there, Metaverse today, and then the Citibank estimate of Metaverse in 2030, 13 trillion. That is a 334.6x multiple of where we are today. Now, if you take the Bitcoin price today, of 46,412 exactly, and you use the same multiple, that will get you to $15.5 million. Big one. But, you know, my price prediction is ballpark about $1 million for 2030. But it goes up, and it could go up significantly more than that based on some of my more bullish models, and also based on the amount of money printing that happens, which drives the debasement of the currency. But it was interesting to note that their number is about 3 million higher than Breedlove's number. That is if you take their multiple of growth, which I believe if the metaverse is going to grow by that multiple, you can be damn sure Bitcoin will too. So I thought that was interesting to look at. Again, just hypotheticals, and you guys know I like to play with numbers. So let's go on. Metaverse. Speaking of Metaverse, if you look at this cool chart from the block, you can see virtual land prices have fallen off a cliff in March 2022. Might be a little bit exaggerated, but this may have been precipitated by the NFT market's recent cool down as well. Everything kind of, all this fake art, fake land, etc. Maybe, who knows what's happened? Maybe it is a nail in the coffin for the exorbitant property prices in virtual worlds. Remember, they can be cloned infinitely, even though they say they can't. Most notably, the monthly average for the cheapest properties in the Sandbox and Decentraland have fallen by 26.1% month over month and 18.6% respectively. Now, I think it's Somnium had a decline of about 13.5% month over month. And the one that managed to not go down was the last one. I think it's NFT Worlds. It only decreased by 0.4%. So that's what's happening in the metaverse. Got to monitor that. And now let's look at the real world, kind of more my speed when it comes to real estate. So we have the highest Case-Shiller print in 35 years. That is the year-over-year increase. January to January, January 2021 to January 2022, real estate prices are up 19.2%. And they believe, experts believe, a perfect storm is driving up home sales. Now, there's a couple of things interesting to note here from this study is they talk about the whole trend of work from home. Many employers now believe, yes, employees can work from home and quite effectively and efficiently. So you have a lot of employees now who are moving from low income tax states or moving to low income tax states from high income tax states like California, Illinois, New York, etc. So people are leaving in droves from Chicago, Atlanta, New York, Boston, San Francisco, Los Angeles, Seattle, etc. to places where there's more sunshine, cheaper real estate, etc. But that's driving up prices. So they're selling high, expensive homes for big dollars, for cash in most cases, and they're buying in these other markets. And that means a lot of cash deals are happening because people are just moving around. So it's interesting to watch. Now, there is one thing that I found very interesting, and a big thank you to Sanjay for sending it to me. This was a super interesting article on Bloomberg Opinion, and it talks about the rise in sea levels are on track to increase and bring about some very destructive flooding. And by 2050, again, a lot of time on our hands, but a lot of people who buy real estate aren't aware of this. And about 40% of the US population lives in coastal areas. It's kind of like the Canadian population. 90% of the population lives within 100 miles of the border of the US. But according to the National Oceanic and Atmospheric Administration, I think it's NOAA, they believe that the ocean levels could rise 10 to 12 inches by 2050, and that will put a lot of places underwater, even downtown San Francisco when it's a big wave surge, tidal surge. You can see big amount of flooding coming in. If you add 10 to 12 inches to that, that can be catastrophic. And this 10 to 12 inches is expected to happen whether or not the world manages to cut greenhouse emission gases. So the point of this is not financial advice, but if you're looking to buy property, get a little bit back from the beach and make sure you got a couple of feet of clearance. So let me see. Now, for those who are worried about their portfolios, even the best and biggest and most expert portfolio managers had a very rough first quarter. Tiger Global Management's flagship hedge fund is down 34% in the quarter. That is crazy. That's shocking performance. They had losses in some of the holdings that they had. Obviously, some war went on. But if you are not down 30% in Q1, I'm personally up a lot because I took some very, very risky bets. But if you are not down 34%, you're beating the best hedge funds in the world. So think about that, everybody. I thought it was interesting. Now let's talk about the yield curve. A lot of people are talking about this. I'll just touch on it very briefly. But really, that the fact is it's probably going to get worse before it gets better. And we have a situation here. We have soaring prices of commodities, impacts, rising yields. The economy appears to be heading towards a recession. Timeline is not definitive. And even if a recession happens, it could happen in the next 3 to 18 months. We don't know. But I do believe that the money printers will keep on printing. Now, this chart here looks at the slope, the 2-year and the 10-year slope, and you can see it's going down rapidly. And what's really bad as well is normally this runs ahead of consumer sentiment, but now the consumer sentiment is negative before the yield gets inverted, which is interesting. So one can only assume that if inflation continues to accelerate, corporate credit instruments will continue to perform poorly, leading to even higher yields in a historically over-indebted economic system. As I say, real simply, the financial system is broken. There will be a reset. We just don't know when. So, but it's not all bad. If you look at the GDP growth rates, quarter to quarter, Q3 to Q4 2021, this is just in the US by state. You can see here that we have crazy high growth. Texas 10.1%, California 9.5%, Oregon 9.8%, Nevada's growing fast, Tennessee growing fast too. So there are areas, there are pockets of extreme growth. So just like around the world, things can still evade this potential recession. If it happens, I do believe if there is a recession, they'll slash interest rates, they'll continue money printing, and it'll be very short-lived. So don't worry about it too much. It should not be a reason for people to leave the stock market. Speaking of stocks, Tesla delivered they beat their expectation despite losing 6 days in Shanghai. And losing 6 days in Shanghai translates to about 20,000 cars. That's how much they're producing there. Now, this was an interesting article again from Bloomberg, and it was an extremely difficult quarter. I think Elon Musk said difficult quarter. He said exceptionally difficult quarter due to supply chain interruptions and China's zero C-19 policy. Outstanding work by team and key suppliers. I think he mentioned he was very happy about them. But remember, this is the installed capacity in this screenshot that I have here. 600 will produce 600,000 cars this year. Shanghai, more than 450, probably more than 500,000. And Berlin and Texas, they're ramping up, but they're going to do at least half of probably what China do. So we are way on target for getting more than 1.2 million cars in 2022 from Tesla. And if they can still beat their number when they lose 6 days because of C-19, that is huge. And that those cars will be pushed into Q2. So expect even better numbers as well. So with that, everybody, I think that's a wrap. Hope you like the content. If you do, hit the bell, do whatever you want to do. But a lot longer than expected, 20 minutes. But there's just so much to cover. And thank you all for being there. A big thank you to moderators and any stickers that we donate. Tomorrow is weekly Q&A day where we answer your top questions. If you have something really burning that you want addressed, drop a comment below and we'll try get to one question. Okay, so maybe more if it's a good question. All right, take care, everybody. Happy weekend.